let's focus in on an independent software testing company, Cigniti Tech. The stock has been under pressure in the last 1 and 3 month period. Krishnan Venkatachary is the CFO of the company, is just to tell us a little bit more about how things have been going up. Now, last half your revenue has seen an impressive growth of about 21%. Are we going to see similar momentum in the second half?
Yeah, we are in the, first of all, thank you. Good morning, friends. And we are on a right track. We are very comfortable in terms of the growth, what we have achieved and what we are expected to achieve in terms of the numbers.
So which segments is it that's driving the growth for you, and what kind of traction has been seen, particularly in the emerging areas and some of the key developed markets?
Yeah, so travel and hospitality and the retail segment has been contributing in a big way for us. This year we have seen a traction in the healthcare industry, and we feel that we are confident that these three sectors will contribute. But in terms of the traction, if you look at the total independent testing market per se is poised to grow from the current 19 billion to about 25 billion, a growth at about 7% per annum. So we stand a very considerable chance in terms of grabbing pie, because we are the future is digital, and we are already prepared on the digital side for the technology in terms of our IP and also the processes very clearly. So we feel that this will help us and aid in getting a better market share and achieve a good growth.
All right, what's the challenge? I mean, how are you looking at order flow right now? Streaming in, what would that mean for the way you close out the year in terms of the order pipeline?
The order pipeline, in terms of the challenges, probably is that I think we have met with the most of the challenges. Probably I would definitely give a little bit of pressure, a weightage to the US elections, but we are very confident on the other side is that things are not going to change on the IT side, and we are going to see an increased traction on the business. So as late as over the last couple of weeks, the kind of order closures what we are doing has been phenomenally great. So I don't see a negative in terms of the order closing, especially given the kind of the technology background what we close. For the year, if you look through very clearly, that we are confident that we will be able to grow on a top line at about 25 to 27%. And though we are not in the process of giving any guidance, but I think as it stands in terms of the order book position and looking at the standings where we are in the market, I think we are pretty confident that we will be able to grow on the top line and both in the bottom line and top line. Yeah.
So what kind of order inflows are you penciling in? What's in the pipeline?
If you look through that, we already have order book position close to, if executable over the next 12 to 16 months, we have about close to $90 million. But we also have proposals in RFP submitted about close to $50 million, which we always see on an average a conversion rate about close to 60%. And I don't see any backlogs or hiccups on this or roadblocks on this. And it's a continuous process. As at this point of time, probably I can talk on these numbers, but as it starts moving up, probably we will have a different growth. The company as such has got a good growth plan basically, but I think we'll come out with our annual, as we come out with the next quarter annual numbers, probably we'll span out and we'll get there in terms of talking how the next 2 years is going to span out.
And how much do you see your margins improving? Let's talk about the outlook here.
Yeah, so this year we should be ending up the year at about the EBITDA of about 16.5% and PAT at about 8 to 8. Currently we are at about 8.2 or 8 point around, and we don't see, there could be a marginal improvement, but we'll be ending up the year around that. But I think the next 2 years, we are pretty confident that a couple of basis points on the PAT side will move up, and also on the EBITDA side. So we are very confident that the kind of efforts what we are making in terms of the on-site offshore, shifting up more offshore focus centric with all these efforts, then optimization of the SG&A cost, we are very confident that we'll be able to notch up a couple of basis point more in the next 2 years, probably even slightly lesser than that.
All right. Thanks very much, Krishnan, for joining us and giving us those details about your business. We wish you all the best for the future. Let's now take a look at Dr. C.K. Narayan's strategy.